Hi everyone, hope you're doing well. Today I'm going to talk about a brand new stock I have started buying. This is a US stock that I have started buying, and it's a bit more of a growth and value play. Now, you guys know me, not often I buy a brand new stock, so when it does, it's quite a big deal when I buy one, and also when it's one that's going to be more of a significant position in the portfolio. It's not going to be a major position, but it's going to be one of the more larger ones where it's not a bit more of a play where there's a little bit more uncertainty around it. It's one where there'll be a bit more allocation to it because I've got a bit more confidence around where this business is going. Now, this stock at the moment has been absolutely smashed, and sometimes that's where I like it, where a business has actually financially been performing, yet the share price is been declining, and there's a big disconnect because when the market realizes we've sold this off way too much, that profit and revenue growth will lead you higher, but also that metric expansion will also re-rate and go up in the right direction as well, which will hopefully significantly help your returns. This is one of my favorite ways of buying a stock. We've had many success stories before, obviously this year, doing this sort of method with AMD, Google, SoFi, Shopify, Hims and Hers. We've had a lot of Meta. There's been a lot of success stories where I like to look for this. If I can find a stock where the valuation has just been sold off way too much, but yet the company's actually been doing really well, and hopefully this is what happens with this business. I'm hoping, this year's been a fantastic year in the stock market for us. We're up nearly 50% year to date, which is incredible. And I'm hoping that, when I start buying these stocks here, this is the start of me planting the seeds, and this will be a stock that when we get into like the back end of 2026, 2027, 2028, this hopefully will be one of those stocks that drives the returns, that we have a successful couple of years in that time frame. The reason why this year's been so great for us is because the stocks that we planted the seeds on in 2022, 2023, 2024, they're flourishing. We've got all the pretty flowers now. So this is now planting the seed on this new stock, and hopefully this is maybe the ones that does very well for us in the next kind of couple of years. So I'll tell you about that today. As well as that, if you're on the Patreon, I did just drop my US portfolio review for October 2025, so do go check that out. If you do want to join, links in the description, guys. It is going up at the end of the year on the price wise, so this is your time to get in at the cheaper rates. The price is going up to reflect the amount of content that's on there as well, and also reflect the successful stock picks at the moment. We've had an absolute belting year and the last few years. So with the information that's provided and the content that's provided, I think that is time that has to be reflected in the annual fees. Right now, I think if you pay annually, it works out as like £5.30 a month, which is it's still like the price of a coffee. So with the information that you get, I think that will easily return that price of the coffee. So your chance to lock in at those rates and get the live buy and sell alerts, all the exclusive content on there as well. And if you do want to start investing, join eToro with the link in the description, guys. I am currently a popular investor on there, and you can follow me on there, like the 294 followers that we currently do have on eToro. Let's get on today's stock. So today's stock, Shift4 Payments, is the new stock into the portfolio. I started buying this one around about close to 2 weeks ago now. I started buying some Shift4 Payments. It is a bit volatile, as you can see here. Came in the stock market in 2020. The stock had a massive rally, and then we entered that 2021-2022 stock market crash. Big pullback, and then over there's been some significant rises, pullback, and then we had a big rise in 2024 to the start of 2025 around February time, and then since then we've had a major pullback from when the stock was about $121, and now we're about $78. $7 billion market cap, so a bit of a mid-sized company. 29 times earnings, which to be fair, the P ratio is maybe not the best metric to use because there's a few one-time charges in there, so I'll just kind of make you aware of that one there. What is Shift4 Payments to start with? So Shift4 Payments is a point of sale. You can see here they currently have the SkyTab point of sale, so this is used quite a bit in when you go in to pay at restaurants and also hospitality, like stadiums, and also like hotels, for example, as well. They also have the Shift4 shop, which is for e-commerce, and also Lighthouse, which is for analytics as well, about the data, about the information that you're getting here. So what I'd say is that obviously I'm going to try and give some of my information to you guys in the next 20 minutes. If you want more information on Shift4, go watch the Investor Day presentation that they did in February 2025. Really good information. It's about 3 hours long, and yeah, they'll explain it even more significantly better than what I can explain it. So give that a look. They also made an acquisition on that day, which is Global Blue, which we'll actually mention a little bit later on in today's video. But you can see here that from when they made this acquisition, you might just actually be able to pinpoint from where the share price was pretty much at all-time highs, and it's been on this drop. So a little bit of a hint there for what's going to be coming up here. But obviously, Shift4 Payments, point of sale, you can see one of the payment devices here at the moment. So they operate in restaurants, hospitality, sports and entertainment, and unified e-commerce. A little bit about the restaurants here. Obviously, they have for this here, they have the Sky tab, which seems to be a pretty good tool they use for the payment side of it at the moment. Seems a little bit cheaper than some of the alternatives that are out there. Seems like it's a little bit easier as well to train the staff up to use the tools from SkyTab as well. The thing with what I would say with SkyTab as well is that obviously once you have it integrated and all your payments and all your business into SkyTab, it can be quite a sticky business model where it could be quite hard for you then to move into like another payment method basically. So normally when these are adopted into a business, it's quite rare that they do switch, which is obviously it's a very competitive space, but also it can be quite a sticky space to kind of, because then you have to change all your hardware and then train your staff all over again if you're to switch, which is worth pointing out. Obviously in the hospitality as well at the moment with, when you go into the hotel and paying for things, and also managing the bookings as well in the customer database. Sports and entertainment, so you might see these in some of the grounds and music venues that you go into. They've got a lot of venues, NFL stadiums in the US. I think in Europe they've recently acquired the Nou Camp Barcelona stadium as well. They can manage the food and beverage inside the ground. They can manage the ticketing, the suites. You can manage the retail sales when you go into the shop. Parking when you turn up for the parking in the car park as well. And self-checkouts as well, as you can see here. And then obviously we've got the unified commerce as well in this space. Now, one thing you want to have is a company that proves that they can do what they've said they're going to do. So originally when they came out with a guide back in 2021, when the company was a lot earlier on in its public company market cycle, they came out with a guidance of doing a 47 billion in volume, and their medium time outlook was 160 billion, and they have hit that target at 165 billion. So achieving the goals they set out last time and overachieving it slightly as well, with a nice 52% CAGR as well. Revenue less network fees, as you can see here, significantly outperforming with a 37% CAGR at the moment as well. EBITDA has gone from 167 billion that time, which they're giving out million in that time. Imagine billion, wow. And now achieving 677 million with a 59% CAGR as well, and obviously free cash flow performing very well during that time frame as well, which is confident. Like they've said that this is what we're going to do, and they've gone and did it, and they've also exceeded it, which gives you confidence when the management team says, okay, this is what we're going to do now. They said that what they would do last time they achieved, and hopefully they can do it this time as well. So at the IPO stage, they currently operate in just the US. They have now expanded internationally here with some of the areas that they're coming, that they've moved into. And you can see it coming soon. There's other areas that they're moving into as well, like the likes of Australia and New Zealand at the moment as well. Restaurant wins. So these are some of the restaurant wins that they've currently got in the US at the moment. When you look at like what they offer when someone gets this Shift4 Payments in, you can see it's able to give the restaurant more information about what the customer is doing, and obviously gives the customer hopefully a better experience. You look at tableside ordering, for example, mobile ordering if you're on the phone at the moment as well. You look at the merchandise experience that you also get, like the alerts and notification payments, if you do contactless payments, gift cards at the moment. Kitchen efficiencies, so obviously from a company's point of view, it's easier for when you're putting the menu into the actual system. Obviously that gets sent back to the kitchen around the order point of view. Get to manage like inventory when it's being ordered, and obviously you can customize your menus as well. You're not having to print them off and redoing the menus as well. Obviously able to manage the likes of loyalty programs through the the checkout system that they have as well, and also a streamlined operation with the table management. So when people are trying to book tables, it can manage all the bookings and sort all that out for you as well. Like I said as well, they're in the sports and entertainment space, and the great thing about like what they operate in is that so someone like a Toast, for example, which is like another payments point of sale company, they go into like anything basically, and like retail. The problem with retail is that what you're taking is like maybe like if someone's buying a bottle of water, you're only taking like $1-2 because they're operating in these high end spending. When you're going out to these venues and you're going to restaurants and sports centers, you're spending like $100. So your take rate that you're making from those payments, and you're handling the big amounts of payments, also means as well it's a nice someone like a Shift4 Payments are also getting a lot more money as well. And normally something like this, it's more of a sticky platform because it is quite hard for a company. When you are integrating all these things in and you're getting all these point of sales around the stadium, it's quite hard to switch from if you get Shift, it's quite a competitive space, but once you get Shift4 Payments in, imagine you have to then change all your point of sale items and pay for all that hardware as well. And imagine then you have to also train your staff to do it all. And one of the things that I'm hearing about Shift4 Payments is it's quite an easy platform to use, and it's quite easy to train your staff up as well at the moment when you look at that. Also in a lot of stadiums as well. I think they recently got the new camp, and managing the ticketing side of it, the parking, when you go in to buy drinks, when you're in the shop as well. Which is obviously great at the moment, and it kind of gives you a bit of point here. Like if you look at a stadium, look at all the things that the Sky tab is able to manage in your system as well. Normally this would be split up to many things, but you're getting this one payment system that managing all this data for you, and it's consistent through the whole stadium. Now, like I said, Global Blue seems to be one of the reasons why this stock is down. Now, one thing that the market doesn't like is big acquisitions, and Global Blue certainly is a big acquisition. You look at this, 2.5 billion. It's a significant transaction for a 7 billion market cap. So I think the market recently has sold it off because it's such a big payment. They're like, I hope this works out for you. The market gets really nervous about it. Now, Shift Blue is the next step into Shift4 Payments because this is going to handle the market leader for the luxury market. So one thing that happens is international travel. So you go on an international holiday, you are able to get your tax back when you're a big spender in you got international holiday. So when you go into some of these, like these are some of the clients that they've currently got on with taking on the Global Blue. So I don't know if you want to look at Apple and you go buy a new Apple, or you go to someone like Chloe and you're buying or Burberry, you're buying these expensive bags, and these people are going on to let's say someone from China goes to the UK and they want to buy a Burberry bag. Now the thing is, obviously, as you are able to claim some of the cost back through that from the international agreement about the travel and the expenses, and Global Blue is able to manage that from that point of view and gives you a straight, quick, like, this is your refund, this is what you're entitled to when you make that payment. Classic way is that you normally go to the airport and you have to go through all the systems, handle about the receipts and all that. With Global Blue, it's a lot easier to do. So obviously, with the payment system, what they're able to do is put these payment systems into these luxury brands, and then also, oh, are you a luxury customer? Oh, by the way, here you go. You don't have to mess about at the airport claiming your tax back. This is what you're entitled to, which could significantly help them as well in these sort of spaces. And the market doesn't seem to like it, this acquisition, because it's so large, but it looks like a good addition into the portfolio as well. And once again, we're talking about those higher end customers, then transaction values are coming through the business. It's going to be a really nice profit that they're going to be making on them. And they're saying, like, look, we can make a lot of synergies here because we've already got the payment system. This is going to be great that we can make more margins from this acquisition. Now, in the investor day, they did set out some longer term goals. The longer term goals, so they set out a bear case, which is like, if we don't really do what we're supposed to do. They're expecting a 3-year CAGR in the high teens rate. Adjusted EBITDA, 3-year CAGR in the high teens rate, and margin expansion of 300 basis points. This is what they expect themselves to do, which is a 3-year CAGR of 25% and adjusted EBITDA CAGR of 25%. Now, the aim, that's like what they are going to try and do, and they think they can achieve it. That would be a 3-year CAGR of 30% and adjusted EBITDA as well of 30% growth. That is very, very good levels of growth here at the moment. And what they're also expecting to do is leave 2024 from a cash flow positive, where they're at the moment, to a 1 billion cash flow in 2027. Now, doesn't take a genius to work out. If you're a 7 billion market cap and you're leaving 2027 on a 1 billion free cash flow, 7 times free cash flow, and you're growing 25-30% a year, you're not going to be trading at 7 times free cash flow. So obviously, if they're able to do that, that would be a substantial, I think, performance from the share price at the moment. And you can see here the ramp up of revenue has been good. The profit margins have started to ramp up as well. Insider point of view as well, there has been a significant buy as well from the chairman of the board, as you can see here. Bought around about 16 million of shares as well on the 11th of August, which is a nice little confidence boost as well. Now, if you look at the moment, they are forecast on this year's numbers to fall to a 14 times earnings. There's some one-time charges in at the moment. That's what I'm said about the 23 times earnings. And on 2026 numbers, which is probably the key thing to be using because we're only now 2 months away from 2026, the forecast is to fall to 11 times forward earnings, which obviously 11 forward times earnings for a company that worst case is going to grow high teens is looking good value. Never mind if they do achieve a 30% growth, that definitely looks very good value at the moment. And historically, this company has been a company that trades around about 40 times earnings, as you can see here. Now, like I said, if we see them hit 2026 numbers and they are at 11 times earnings, that is a quarter of what they have historically traded at, which is pretty incredible from that point of view. We are expecting revenue growth to go on a little bit of an acceleration. 30% revenue growth, 42% in December. This year, 28% growth. Next year, 26% growth. But bear in mind, they have got the Global Blue acquisition. So this has slightly inflated revenue growth because of the acquisition. Putting me on the spot here, I think without the acquisition on top, I think they're currently growing about 18%, I believe, which obviously is still pretty good growth, but obviously this speed up of growth and accelerating growth as well obviously is pretty good, and a decent ramp up on the EPS point of view. Now, one competition wise, and one person that I'm going to use here as a bit of a comparative is Toast. So Toast is another point of sale. I could not believe the amount of places in the US. Last time I went to the US, the amount of places that are now using Toast. And I was just saying there's a bit of competition between like Toast and the likes of Shift4. One thing that put me off Toast when I originally looked at Toast is they didn't make a lot of profit. That's what put me off Toast. And there's a big difference between Shift4 and Toast because Shift4 make a lot more levels of profitability. The reason why is because obviously the areas they operate in that we talked about, the retail space, the hospitality space, bigger spending amount of money there, so you make more money as well. The thing with what Shift4 Payments have done as well is they don't spend as much on the product. Toast do spend. Now that might benefit Toast further down the line. We'll see what happens. But as well as that, Toast have been trying to acquire customers by doing like big sales and marketing campaigns. As we've seen with Shift4, the tactic that Shift4 tend to have is they tend to go for these big acquisitions like we saw with Global Blue, and that lets them achieve more higher profit margins. They don't have to do these big sales and marketing campaigns that Toast are doing. Now that does put the Shift4 Payments balance sheet into a place where the debt has gone up a little bit at the moment, and I would like them to pay the debt down, and they are saying they are going to pay it down slightly. I think they're still going to have a bit more of a higher leverage position, but that is something that I will point out here at the moment. But when you look at the likes of Shift4 to Toast, Shift4 is obviously, and once again, worth pointing out that it is the acquisition in here, but the Shift4 revenue growth is certainly accelerating more than Toast at the moment. But you look at Toast, and Toast on the forward times earnings is 46 forward times earnings. Like we said before, when you look at Shift4 Payments, what is Shift4 Payments trading at? Well, if you go on this year, 14 times earnings. Next year is 11 times earnings. So Shift4 Payments right now, compared to one of the competitors here, which is Toast, is what, a third of Toast valuation, and that doesn't make sense to me because Shift4 Payments is growing faster than Toast. It also has higher profit margins and higher gross margins than Toast, and it's a third of the valuation. Now you can see the balance sheet's slightly worse, but I think there's a big disconnect going on there with where Shift4 Payments is at. Now, is the negatives? There's got to be negatives because you don't end up with a stock being down nearly 50% without any negatives. Now, obviously, I think I posted one of them at the moment is the Global Blue acquisition. I think that when you make those big acquisitions, the market gets nervous about it. You took a lot of debt on it. It's like, this better work. And I think it will work with the business. I think the market's getting a little bit silly with maybe selling it off from that point of view. And I think when they see those growth rates come through and those synergies come through, it'll calm them down. I can't see why the Global Blue acquisition won't work for them. So I think that's one reason why. I had to ask Gemini as well about what other things they could potentially see as, why the stock could be down. So they did talk about the acquisition impact. We've mentioned that one. They talked about the CEO transition going on at the moment. So the previous CEO and founder has moved to the chairman of the board that we have seen before, but he's still involved in the business. And the new CEO as well, he's been with the business a long time as well. I think maybe nearly since day one, to be fair. I don't know if I can, I've not actually put this in the video and I've not got it up ready. So bear with me, but I believe he's been at the company for a very long time. So yeah, 2018 it's saying there. Yeah, 2018. So he's been at the company now for a good few years. So he's definitely got a good, what is kind of going on with the business. And like I said, the CEO is still in the company as the chairman and involved in it. And obviously, he's just giving you a big sign of like, hey, I bought a big stake in the business. So if he wasn't confident that he was going to turn it around, I don't know if he'd buy that stake. And when I listened to the investor day, he did sound pretty positive, to be fair. So they also talked about a decline in net income. The company net income has declined significantly. Now, I don't agree with this at all from Gemini because when you do look at, I've got it up somewhere, the latest earnings from Shift4 Payments, you can see here the income from operations has actually increased significantly, going from 59 million to 83 million. So the company operating has actually gone up a lot in profitability. Now, if you do look at the net income, yes, it has declined slightly, but you'll see there's a lot of one-offs kind of going on here. So you see here there is, where has that gone? So there's an income tax benefit expense of 15 million at the moment, and last year they had a one-time benefit as well. So that's why like the PE is a bit distorted at the moment, and when it naturally sets down, it'll be probably a lot lower. So I would be using the income from operations here, and the income from operations are actually showing it's increasing. So that one there is not a negative I do agree with, to be fair. This one I actually do agree with is the missing earnings and revenue. So on the latest earnings on Shift4 Payments, they did miss their EPS by a decent chunk, to be fair. And also on the revenue point of view, there was a little bit of a decent miss, which you don't want to be doing. Now, actually, when I looked, Shift4 Payments do actually have a little bit of an issue with the guiding. So you can see here in August, they did miss. And then if we go back to the last earnings, hold on, this will be the easy way to do it. Let me go on Seeking Alpha. Seeking Alpha, here we go. By the way, if you want to sign up with Seeking Alpha, I've got a link in the description with a big discount code as well. I use this all the time for my US stocks, especially in earnings season, with earnings season coming up. So yeah, that was the last earnings in August. If you go here, so the beat on EPS by a significant amount, but then the missed on revenue by a decent amount again. Beat on EPS, but missed by a decent amount on revenue. And then here, so the missed on EPS, missed on revenue. So as you can see, they do go quite wide of the consensus, and they do miss a little bit. That has been the theme in the last few years. Last few earnings. So they do need to get better at sorting that out. It's better to sandbag and then overachieve. Now, the good thing with Shift4 Payments is that, as we look at the past performance, the graph is going up in the right direction. Like, you know, you look at revenue growth from when they IPO'd, it's gone from 1 billion to 3.6 billion. You know, it's over tripled. You look at the profitability, they were loss making at 48 million a year. They're now profitable at 207 million a year. So the trend is going up, but it's better to have a trend going up and they beat the numbers when they're doing it. The market likes that a lot more. So that's certainly something that I've noticed that they need to improve on. So yeah, overall, when I look at what negatives I can find, and also the balance sheet, I think you kind of mentioned that one before. Like, I would prefer a little bit it's okay, but a little bit of a stronger balance sheet would be good. So the only negatives I can see really is that, well, I guess these are all true, but the significant ones is making sure they get the earnings in line a little bit more and controlled, and also just strengthen the balance sheet up. I think the decline in net income is just, I don't agree with. CEO transition, maybe, but he's been there for many years and the old CEO is still there as the chairman of the board, so that's not a big one for me. Acquisition impact, yeah, it was a big acquisition, but I think Global Blue would actually work for them really well. So yeah, the big thing for me is just manage the expectations a little bit and just pay down the debt. And if they keep doing what they're doing, or if they get anywhere close to what they say they're going to do, obviously I think Shift4 Payments will do really well, which then translates to the numbers. Let's have a look at some numbers here with Shift4 Payments. So I've not done any share buyback. They historically were big diluters of the company. That stopped in the last 12 months, and they're currently doing a share buyback as well, which neutralises it a bit. So I've done, even though they're doing a share buyback, I've not factored it in, and I've not increased the shares outstanding. I've put 15, 20, 25% revenue growth in on the high side, which obviously is the mid case that they gave us. I've done 5, 7, 9% profit margins, which I think is very much in the range that, you know, they were saying 30% adjusted EBITDA margin. So I think that's a very fair level in there. I put 20 times earnings in. I'm not going to frothy valuation here at the moment. And on the low side, 7%. So you'd be disappointed there, but you're not losing money here. Mid side, you've got 77%, which is okay. You know, I think you might just get ahead of the S&P there. And on the high side, you got 168%. So that's quite attractive to me. Now, realistically, I think if you're doing these numbers, you're not going to be trading at 20 times earnings. I think you could be towards 20, 30 times earnings realistically. So if we were to just update these numbers to 30 times earnings, and then what I'm going to do is I'll go back and update the numbers to 40 times earnings, just because that's where they've historically been, and that would still be be below like Toast's valuation as well. So now you're seeing a lot more upside there. That's, you know, really nice upside. And on the mid side, on the high side, 300% return. You start talking some significant return there. Let's just add 40 times earnings. Best case scenario, if they are able to achieve 40 times earnings like they used to do, bit more to where Toast is as well. Not bad, is it? So, you know, when you get in that low side, even coming up 100%, and on that high side, 436%, yeah, that's looks very attractive. Let's say they do execute to the best they can, and they do hit those 30% growth CAGR targets. Not bad, is it? Let's say that they are able to really drag up that profitability. Let's say they do get to like 11% profit margins. Oof. It's a big upside in it coming up there. 666%. Whoa, Halloween is here. So, yeah, obviously, like, you know, I don't like telling you guys, like, I'm coming out with, like, frothy upside, like, oh, this stock's going to make 666% return. That's best case scenario. Like, they could do it, and hopefully they do it, and sometimes it's, you know, it is nice when that does happen. You know, you look at likes of Hims and Hers, for example, likes of SoFi, for example. Those are stocks where I showed you, like, best case scenario, this is what they could do, and those companies have gone and achieved that. Don't always work out, and sometimes they kind of get to the mid side. So, like I said, on not getting carried away, decent numbers where I would expect them to grow 20 to 25%. I think those profit margins, 20 times earnings, achievable. I'm happy with that return here. But if they are really going to execute and they get to those higher sides that they kind of said on their investor day, like, this is what we could do, then you're seeing more upside. You're seeing where we could be talking 200, 300, 400, 500% return, which is obviously attractive. I'm not saying that's going to happen, but if the company executes to them sort of standard that they say they could do, that looks really nice. But I won't assume that. I don't like assuming that, but I'm just pointing that out for you guys. So with Shift4 Payments, yeah, I'm liking it at the moment. I have actually started buying a position here in Shift4 Payments, and yeah, they should be reporting earnings soon as well. So I'm looking forward to a financial update as well from these guys. So hope you enjoyed the video as always, guys. Just my opinions as always, just giving you guys stock ideas out there to look at. So hopefully there was some useful information in there. Helps you if you're looking at Shift4 Payments. Hopefully there's useful research. You know, that's why I started the YouTube channel over 8 years ago now, maybe. I think it's about 8 years. Is to hopefully help share this information out on YouTube and help people, and hopefully there was useful information in there. Have a cracking rest of your Sunday, guys. I'll see you on Monday for a week ahead preview, I think, and yeah, see you in a bit.